one is retail real estate, connecting the physical spaces with the always connected consumer.
Well, thank you very much. I know it's been a very long day, and I don't intend to extend the evening, at least in this room, and I don't want to be the one who's going to be in between the people in this room and the whiskey and the beer. So I'm going to try and wrap this session as quickly as we can. But with Manisha chairing the session, I mean, she's covered most of the points that I would have wanted to cover. But having said that, there are a few points which we thought a different set of panelists would be able to bring out. Some of whom have got more international exposure and experience and understand, what's happening in those international markets, and some of the other questions that I thought would be relevant to pick up, given where we are in our evolution. So, Joel, I was going to start with you. We didn't have an international panelist with us in our previous session, but I wanted to understand, what are you hearing in Hong Kong and China about the onslaught of e-commerce on the physical retail real estate space?
Okay, so I'd say actually last year we carried out as CBRE an online consumer survey. 11,000 participants we spoke to across Asia Pacific. There was about 1,000 in India. And quite interesting actually, so we found out that 84% of people in India check prices on their phones when they're in and they're around the store. Across Asia Pacific, this is 61%. We also saw that 85% of people in India access social media to find out information about products and offerings, versus 67% as an Asia Pacific average. So I think India in particular, people are very, very connected. I mean, the good news is that half of the people are still buying in the stores, so it's researching to buy in the stores. I would say for Hong Kong, it's such a compact market that online is almost non-existent. We also don't have duty, so you don't have the it's very convenient, it's compact, you don't have a price advantage. Online is not a big thing in Hong Kong. In China, online is pretty big actually. In China, typically we have high import tariffs for products coming into China. And also for manufacturers, a lot of the mass market brands in China, they manufacture there. They have to send their product out and bring it back in again, or send it to bonded warehouses. They pay double taxation. So as a consumer, the price is usually 30% more expensive if you're buying in a store for international brands. So I think the price in China drives a pretty buoyant online market.
And Joel, what's the reason why in Hong Kong the online hasn't been able to penetrate?
I think because literally 10 minutes and you can drive across this whole city in 10 minutes, 15 minutes. So it's very, very convenient. You've got all the brands on your doorstep. You don't have duties. People love to shop, so you take away the price and you take away the convenience factor, and you still have the experience that you have within a physical store, and you still have the range. So, a lot of the online advantages don't exist in Hong Kong.
Yeah, and do the online retailers sell the same product cheaper than what you find it in the stores?
I think in Hong Kong there's not that much of a difference actually, which is fundamental. I think the strongest online markets that we see are in Korea, where there's a big price difference, and especially when there's franchise partners involved who have to build in some margin. Japan is fairly strong. China is quite strong. Hong Kong is not really a big feature.
Very interesting. Varga, I'm going to come to you. We've seen that the physical retailers have gone on to online. Do you think online retailers would start to take up more and more physical stores to retail?
All right. So I'm from Shopify, which caters to a lot of SME, small and medium scale businesses. So it's not easy for a small and medium scale business to suddenly decide that, hey, let me go into the brick and mortar model. It's expensive. Somebody clocking a couple of CRs annually or maybe doing 1,000 odd orders in a day. It's a big decision for them when they think of going into a mall. What we generally encourage is for people like them to start up pop-up shops. So pop-up shops is something that has been very successful with small and medium scale businesses. Of course, online is going to drive majority of their sales, but what we really encourage them to do is maybe have a pop-up shop where their customer is, where maybe in a mall, maybe in a gallery, an event. So that actually gives you a hint whether you should be looking to go into that big game of a brick and mortar entry.
So you are finding that there is a correlation between an online retailer getting into physical retail space as well.
Absolutely. There's been a lot of conversation around cannibalization and whether online is actually cannibalizing. I certainly feel that it's enhancing, not cannibalizing, because experience is always going to be a core part of buying. And what online does is it makes it available, it's convenient, agreed. But when a customer is going to make a purchase, it's totally on the customer, right? So that is the reason why online can get into brick and mortar, but it should be step by step. First pop up, then go into offline ways of marketing, but then it should be step by step.
Yeah. And you're probably one generation junior to me. Tell me that the generation which is perhaps even younger to you, are they only going to do online shopping, or do you think that they will still want to go to physical stores?
They will still want to go to physical stores. Well, I'm an avid online shopper myself, but when it comes to buying shoes, I don't buy shoes online. So I will go to a brick and mortar store and walk a little in the showroom and then feel that I'm comfortable in the store, in the shoes. So the younger generation than me, yes, they are very driven by online. But again, when it comes to experience, a lot of people have certain niche categories that they want to go touch and feel and buy.
Ajay, in the last session, we discussed a lot about how malls have to change to be able to remain relevant. How do stores and the retailers who are running those stores need to change and take on the online slot that is coming up on them?
See, malls are differently shaping up as per the market. So it was earlier location, experiences, entertainment. People have tried all their hands. And there are few of them been successful, and we have case studies in Delhi, Mumbai, and Bangalore who've been driving, and you've been the leader in doing different activities from time to time to engage retailers and customer experience, and developer themselves are becoming retailer to engage these malls. So once developer is becoming a retailer himself to manage these malls, he himself is putting his footprints into that shoes to see how experience that store needs that particular intervention, or to the mall footfall drive, or whether it's activities related to festivals or any driving, whether it's a food festival, whether it's a fashion. So it's all about developers bringing more energy before retail in the formats of malls show their liking and their behavior. So it's a joint collaborative approach where malls have taken the shapes.
And Ajay, would you say is that that the effect of online is being felt more on tier 2, tier 3 cities than in tier 1?
Anuj, I don't think tier 2, tier 3 is still more towards jo dikhta hai wo bikta hai. So it's more on live stores. They still experience what they are physically going, whether to high street or community markets, or to the markets which are in the catchment where they're habitual of going to typical kirana stores, or typically, food and beverages. So everything is, they're going physical interaction. It's a touch and feel, what we heard in the last session. And that is what is driving tier 2 and tier 3. They are not changing their mindsets as per the population numbers and other reports has been mentioning. So that is the major concerns from us, that tier 2 and tier 3 will always be a brick and mortar dominating cities for India.
Interesting. Joel, which are the products that are going to, or which are the segments of retail that you believe will completely go online? We heard in the earlier session, books have moved largely and music has moved largely. Which other products do you think for a prospective mall owner, he should be very wary of not having too large space being given to those products?
So I think over the last 10 years, the sort of electronics sector has really struggled, and that's certainly moved online. So that's already happened. It's interesting, we talk about books. So in the West, this is this has definitely gone online. In markets like China, it's actually making a bit of a comeback. We have a few very, very strong book lifestyle concepts that are really doing very well, and they're on the expansion drive. So I think there's definitely some regional variances. Then, I think just products where there's a huge price disadvantage from buying in a store. And again, I think this is more country specific than product specific, but in markets where there's huge import tariffs on certain products, or the price to the consumer is cheaper than they can order it online, then I think that they're going to struggle in the short term.
Yeah, I agree. And coming back to you, we discussed in the earlier session that the investor is continuing to support at this moment in time online because there seems to be losses that are being supported by the investors. Two questions. One, do you think that the investors would soon run out of patience? And the second is, the valuations that the online is today getting, are they realistic?
All right, so will the investors give up? No. There's too much money already poured in. I don't think they'll take a step back. More so because the internet penetration is here to grow. I was at GMIC last week, Global Mobile Internet Conference, and a couple of guys from China had come down, and they were saying that today what they're seeing in India is what China was back in 2003. So it's a very exciting space, and investors definitely will not step back. India is the last country where they have their bet, right? So US, China is looking at India as their next big market. So that's the answer to your first question. Your second question
the valuations that the online is getting today, are they realistic?
Well, I think they're very futuristic. Realistic, yes and no, because looking at what projections are coming up, if you have looked, we have all looked at a couple of projections which are giving numbers of trillions, and looking at the way we are going, there is a great chance that the numbers would be proved right, but then nobody can be certain.
Ajay, I'm just wanting to continue with that thought. Do you think that the online or the e-commerce setups that have happened over the last 3 or 4 years, all of them are going to survive, or you believe that there is going to be consolidation in this industry very soon?
I see the products has to be, or the category has to be made in such a way that it has to be a blend of both offline and online, putting up together as an on the platform, whether it's a marketplace or it's an online or it's a managed platform where you're doing a fulfillment service, what Anush told in the last session, especially to real estate. So if there's a fulfillment, services that are rendered, then there's a attraction, and which gives an investor rupee or an exit route to understand how the business will run. And forcing the current scenario, I think the bricks and mortar has to be synergizing together. They will have to go as a hand in hand. And way forward, it looks like a world of M&A, which a lot of small companies will get into the large companies on the online space too, where they will need a lot of big daddies to run their small portfolios. So that's what I see.
Joel, I'm going to take the opportunity, given that you have experience and exposure in Hong Kong and China or Greater China. The mall developers, they continue to build more and more malls, and every day we read in the papers that the next mall is bigger than what the previous developer did. I don't know whether it's being driven by business or is it being driven by ego?
And again, it depends which market you're looking at, but I think a couple of startling statistics for you. So this year in China, there'll be 90 million square feet of new space. Next year, there'll be 140 million square feet of new space. Wow. So there's a lot of supply. And actually, we had a sit down with our team in India the other day, and we worked out that in Beijing and Shanghai combined, the existing stock is about the same as the whole of India. So I think in India, there's a genuine need for more space. And also, if you look at the urbanization rate, in a market like China, it's 50%. In India, I think it's 27, 28%. So given, it's obvious that that's going to increase. It could be 40, 45, 50%. And, just spending, it's my first trip to India, but spending a few days in this market and looking at the amount of stock that there is, existing and future, given this huge urbanization that we're expecting, transport infrastructure, I think pretty much every city in India is completely undersupplied. So supply's not an issue in India. I think in other cities it's been driven by governments who benefited from tax revenues, and it's sort of, some markets we have some real supply issues, oversupply issues, but certainly not here.
And Joel, with the Chinese economy slowing down, are you seeing that impact on the retailer sales and perhaps consequently the mall developers slowing down building of new malls?
So I would say that the people aren't starting to build new projects, but there's already a huge pipeline of new projects opening. I think in the value sector, it's very, very strong. It's a very strong market. The retailers being extremely aggressive on commercial terms, but they're adding 100 stores a year. In the food and beverage sector, it's very, very strong. Where we're feeling a bit of pain is the luxury sector, but there's a clampdown on corruption. There's a few factors influencing this. So sales have certainly fallen in the luxury sector, but I think in general, I'd say sales overall are quite flat, marginally down.
Yeah, and the international retailers continue to grow their footprint in China?
They definitely do, but there's just a lot more due diligence. I'd say, 2/3 of the pipeline is in emerging fringe areas. 2/3 of that is probably inexperienced developers who are maybe residential developers building their first shopping centers. So of course there's an element of risk, but I think what retailers are really looking for now more than just location is operation. Operation has been, and management, and promotion has been a real challenge in that market. But there's a handful of developers who do this very, very well. And if they have a non-core asset with a great team, great operational team, that's almost better than having a core asset with an inexperienced developer.
Ajay, other than retail, where do you think that the e-commerce would create disruption? Earlier in the session, we heard that perhaps on the housing segment, there's going to be e-commerce which may be able to disrupt. Where else do you think e-commerce can create that disruption?
So from the retail and commercial side, which is a startup after spending a lot of time on the ground level, so we thought, what is the pain points in retailers and brokers, consultants' life, and developers' life, going online, where there is done all the starter sales, smaller units, smaller fragmented units, and which can be tapped under a certain bandwidth of areas. So CRE took an initiative of disrupting the landscape here, which are areas less than 10,000 square feet, fragmented vertically or horizontally, but are not well aggregated, and which needs the right audience and right way to market it, so it can get maximum reach, because these are not under the control of landlords or have the leasing rights with the developers. So we thought we will change this landscape and have a presence in this game.
Yeah. So you're saying it is real estate and retail.
Yeah.
Bhargav, any other sector that you think that it may impact?
Well, real estate is definitely one sector, but retail again has it's huge. So a very exciting space is food tech. Food tech today in Bangalore, I'm from Bangalore, and food tech in Bangalore is a really exciting space. In fact, one of my best buds has opened an online coffee shop called Drop Cafe, which is disruption to Starbucks. So what Drop Cafe does is it basically gets you coffee on your table. And they are a customer to Shopify again. So I think it's again a matter of convenience and comfort, and just the fact that you do not have to go down and walk up to the nearest coffee shop to grab a coffee, and you're just too busy in work and you want the best coffee, not go to the coffee vending machine, and you're actually able to order a coffee at your desk, is something that is amazing, innovative, and convenient. Yeah.
So my last set of questions to the three of you is, Joel, and I'll start with you first. If we were to fast forward 10 years, so we're at 2015, and we were to say we are in 2025, what do you think would have changed in this 10 years when you were to reflect back on e-commerce and real estate correlation? And the reason that I ask is that 10 years ago, if you were to ask me that e-commerce was going to be such a big discussion that we were going to have, a couple of panels on that, I would say, no way. And it's in the last 3 or 4 years, it's really gained momentum, at least in our part of the world. So if we were to fast forward to 2025, and then I'll come to you, is where do you think that the correlation between e-commerce and the physical retail space is going to happen?
So, well, firstly, I think we'll still be doing panels. We'll still be talking about it. We probably won't be so nervous about it. I think we'll have embraced it. But if we look at what happened in the US and look at what happened in Europe, it was not present, and then it grew, and then it plateaued for a long time, and then it's become slightly more advanced. The common denominator in all of those markets is that the in-store experience, whether it drives online sales or sales in that store, will always be present, and I think retailing will always be a part of our culture. I think even looking now at the correlation between online and offline, we're seeing that from our research that when the consumer orders online and picks up in the shop, 81% of them in India, in this market here, buy something else in the store. We don't have data to see what else they do in the shopping center, but I'm sure it benefits the shopping center. I think in 10 years' time, online will have grown substantially. It might be 30-40% of total retail sales, who knows? But but I think there'll always be the space for the experiential retail. The only other thing I think might happen is that some of these non-core assets have to compete through. Everyone, there's been this whole lifestyle buzz, but I think they might have to compete through price. We might see more of a factory outlet shopping center. Retailers just on turnover deals, factory outlet 30 to 70% discount on the prices, because I think the non-core assets are going to struggle just pushing the whole lifestyle aspect.
Ajay, your thought? Joel's very, very confident to say both of them are going to survive, but really e-commerce will gain momentum and it can get up to 30-40% of the retail sales. Yeah, it's a good guess. Yeah. So 10 years fast forward, where do you think we're going to be?
Well, difficult to on numbers, but yes, I think the perception of online behavioral will definitely go many times from the today's levels of understanding and customer behavior. So we see that I think there will be a lot of need-based and service-based online portals or online solutions. Any service will get into a more streamlined them from customer, because India is that place where customer sensitive is very important. And from the real estate side of it, we say where there is a struggling of, I think everything evolved through a regulator and everything should come up on covered areas and carpet areas for retailers by the time. It should streamline, Anuj, and that's more record. And from the online space, yes, developers will have to keep on doing experimenting with the online behavioral, engaging clients. It's 24/7 business. You just can't go for holidays, leaving the mall aside. Or whether you're doing a Dili Haat, a mela, a food mela, the engagement has to be there, whether through online or through brick and mortar business, the offline way. So in next 10 years, transformation will happen, and I think the productivity will be 1:1, it looks like.
So Vargav, just continuing with that, online today is very fashionable. It is what it is. Cool. I wish I was 20 years younger and could have gone to the private equity investor who finally invested in the business that I set up, but took a pound of flesh. I think you guys, do much better than what we were able to do at that time. But the question is this fashion of online retailing going to become a business in 10 years' time?
Absolutely. I think affinity and proximity creates awareness, which finally drives sales. So affinity is created by online marketing. Proximity is created by offline. This together drives awareness, it makes the customer aware, and finally you get sales. So sales can be through any channel, right? The customer can make a purchase at any point of time, but then you have to be there. That's the entire idea of being omni-channel, just being present where your customer is. Another very popular model which is going to grow in the next 10 years is the solo-mo model, which I keep reading about, which is the social, local, and mobile, right? So social, what solo-mo says is social, you need social interaction with your customers so that you get more closer to them. Local is you need to be local because at the end of the day, customers always do not want to go with the big players. They appreciate local players as well. And mobile, of course, which is available to the customer at any point of time. So though global players today, they are not clocking up to even 10%. So their e-commerce sales are not even 10% of their global, of their entire sales. This in the next 10 years, of course, like Joel said, would move to a 25 to 30%. But then at some point of time, it will reach an equilibrium like it has in the US, wherein the experience would continue with brick and mortar, but then the affinity would be created by online.
I think it's been very well summarized. The way that you've said is that both of them will coexist, and it'll come up to a maturity level where both will start to respect each other, and hopefully the online will become a sound business for many of the players who've set it up. I know it is very late in the evening. I'm not so sure if there are any questions that anybody wants to ask. So you got one hand up there. So, I mean, if there are any questions, we can go around, and if you got the question for a specific panelist, please let them know and also introduce yourself.
My name is Dheeraj Dogra. I'm just going to make one comment, and I want you to react on it. See, even in the most mature market, retail market, which is the United States, today only 19%, 18 to 19% is what online sales is. Now, these guys have been matured for a very long time. The idea, I think, is the standardized categories like books and music, electronics, and travel. Things which are standardized, which a person can, just look it up, see what a Sony TV model XYZ would cost in a store and what it would cost at a site. You'll just go ahead and buy it. I think other categories, even in the US for that matter, yes, the bookstores are closed there. Music stores have closed. Video stores have closed. All of those things have happened. But when it comes to touch and feel, it's going to be there. And especially when in the US, even the normal brick and mortar stores have the depth. When I say the retail depth, you were talking about shoes. So if you wanted to buy a pair of shoes, and if your size is in India, if you were to buy, if it's 8, in the US you can get an 8 AA to an 8A to an 8 medium to an 8 wide and 8 extra wide. Okay, so we don't have the depth in India as it is. The retail it's not there. We don't even. If you look into categories or whatever. So I personally feel that it'll continue, but only the standardized categories. The ones who have tried, even in standardized categories, who have tried, like you said, from going from only e-sales to brick and mortar. I'll give you 2 examples. One was Gateway Computers. It's busted now, and so was Dell. Okay, Dell is not busted. And these guys were doing only e-retail. They tried to build up stores. They didn't do well. So, because that is something which you can build your own computer sitting on at your home. So I think that's what it is. So if you want to, any of the panel would like to comment?
I think you've answered it yourself. It's a good observation, what you said. And it is true that if there is a wider variety and more in-depth choices, that is where the brick and mortar will continue to flourish. If it is standardization, then, clearly online is going to have the last say. So thank you very much to the panelists. I know it's pretty late in the evening, but I appreciate you staying back for this session. Thank you.